What's up, everybody? I'm Xavier Giarco. This is Doxa Wealth Group Finance, and I'm 26 years old. I do options as my full-time gig, and I want to help people accomplish generational wealth and give back to the community. So today I'm going to talk to you guys about why people lose buying options and a no kidding way. If I had 25K or less, because I did at one point, how I would do my options trades. So 90% of retail traders lose money buying options. They're gambling, hoping, praying for a big win. Meanwhile, the 1% are quietly collecting cash every single week or monthly by selling options instead. So I'm going to show you exactly how I build consistent income with less than 25K, no margin required. Using a strategy most gurus won't teach you because it's not sexy enough. This isn't about hitting home runs. It's about consistent singles and doubles that compound into wealth over time. If you have under 25K and tired of blowing up accounts trying to get rich, pay attention. This is a small account blueprint I wish I had given I wish someone had given me when I first got into the stock market. Because when I first got into the stock market, I was just buying and holding. And I had retirement accounts, yada yada yada. ESP in the Navy, like a lot of people do. And I made my first month selling options. I made more than I made my entire 8 years putting money in the TSP and letting it compound. So we'll go to my trading log. This is actually my trading log right here. This is for the month of March. So a lot going on, but we can see right here, I took 90 trades and I won 86 and I lost 4. So when we look at that, 95.5% win rate. We'll go to last month, April. And mind you, if you know anything about the stock market, the market has been absolutely crazy the past couple months. So options trades, 40 taken, 39 won, 1 lost. So lost 4-4. That's the last time I lost any trade. And then we'll go to now May. And this is the current month. 13 trades taken, 0 lost. This is my total net, just under 1,800. So pretty good, so you see there's something profoundly psychological about the asymmetry between options buyers and sellers. Buyers are pursuing dopamine hits, lottery ticket mentality, right? They're going to the casino, they're playing a game of probability, impatience, and accepting responsibility for consistent execution rather than chasing the dragon of overnight success. Which game would you rather play? The one where 90% fail or the one where probability tilts in your favor? So we'll examine buying puts, selling puts, calls, you know, all that. So I'm a big fan of Palantir. Let's just say hypothetically I had 25K. This is a little bit more, I guess, on the riskier side, people would say, but in my opinion, since I'm bullish on the market, when you sell a put, you want the stock to go up. When you sell a call, you want the stock to go down. So going down means you're bearish, going up means you're bullish. And I'm always bullish. So Palantir. I always advise people to do your own research. Um, all of the information's public for all these publicly traded companies. So this is kind of what I do, right? So I find stocks with an implied volatility of 60%. What does that mean? Palantir, this is selling options. ETA is the recommended based off of analysis and over a decade of research and selling premium. So this is how you figure that out. You sell put. Just come down here to a delta of 30. This is your delta, your Greeks. If you don't know, maybe I could make a video about that later on. It's not super duper important besides delta and theta. This is what's really good for option sellers. Delta is the probability. So 30 would be a 70% chance that you win this, and then theta is $8 loses value. So that's good. We want the option to lose value. So if I had 25K or less, I would sell a put and then buy a put with about a $5 spread. $5 spread is a 128 profit. Max profit 128. Max loss 372. You never want to go more than 3 to 1. So this is obviously under 3 to 1, which is great. This is a defined risk trade. So say I have 10K or whatever the case. I don't want to risk more than 20% of my portfolio personally. Okay, maybe you're different. Maybe you want to go all in. I don't recommend that. But if you did 2K, you could do, what's that, like just under 5 contracts. 5 contracts with 2K gets you 640 bucks. Now you could do this with your entire portfolio if you wanted. So what happens when you do this trade? You got the bid-ask spread. This is super wide up here, by the way. You do not want it that wide. You want it more of like 10 cents in between. So that's something else you have to look for. By the way, the volatility is 60. That's right on the money. That's really good. Anything above 60 is great. So you do 5 contracts, limit the bid price. You want about a 10-cent spread. So that means that bid is 80. You want the ask to be around 90 to maybe $1 at the most. Depends. So you would do that trade. And then 48 days till expiration. So what usually happens for me is I will do this trade. And you remember we sold the options for $5.60. Um, say we sell it for $1. I'll wake up tomorrow and those 5 contracts. The contract now will be worth, let's say, 65 cents. So the difference of that is all your profit. So I'll buy it back for 65 cents. So I just made, let's see, 35 times 5. So like 180 bucks around there. I don't know. I'm not that good at quick math. But you're gonna make over 100 bucks within a couple days with just money that you have liquid. And I mean, it's gambling, but this is more of some people would argue gambling. I would say it's not gambling at all because I understand Palantir and I understand what's going on with the company and why it's doing so well. Something else you can do, not really necessary, but if you want to get like super dialed in on your trades, you can go to here, Palantir. Um, this chart right here is the 50-day moving average, which would be this pink line. Then you have the Bollinger Bands, which is a one standard deviation up or down the stock price over the span of 3 weeks. And then you have what's called the RSI resistance and support index. So I don't really do this as much, but if I want to make a super calculated move, you can use this technique. So the RSI, resistance and support. Resistance is the top, so as far as it'll go up, and then the support is the bottom. So anytime it comes outside of this band right here, below 30 means it's oversold, and then above 70 means it's overbought. It's always going to start course correcting, like 90% of the time. Look, it just follows it almost to the T. I like the 5 minute interval during the stock day, but sometimes I'll do, just give you an example, like a month. It just gets a little bit more lengthy, right? Obviously. But that's what you could do if you wanted to like really dial in your trade with less capital. Okay. So that's pretty much it. Like you sell puts, 20 to 30 delta. You can do the same thing with covered calls, which is a put credit spread. Um, Nothing crazy. You can set the target for about 50% profit. It's really that simple. Like people overcomplicate it and it's really easy to do. You just can't be real like you have to be calculated about when you do this. You can't just wing it by buy your option and hope it prays it goes up or whatever the case. If you do the 45 days till expiration, 20 to 35 delta, you buy back at 50% of what it was when you bought it. So if you sold it for $1, you buy it back at 50 cents or 65 cents or whatever. However much you want to make. If your goal is $100 a day selling options because you have 10K, that's probably possible. You could also do what's called cash secured puts on cheap stocks, like let's say SoFi. If you had $10,000 cash, you could sell puts on SoFi. So you could do weekly income right here. Look at that. That's kind of a high delta, but you could still do it. Like if it goes to 13, 31, do that. Cash secured put means you need to have enough to cover 100 shares of that stock price. So 13 times 100, 1,300 bucks, roughly, plus the premium. So it actually negates your value, like it goes down a little bit. So you're buying it less than what the stock is actually worth. As in break even price 12.69 because the premium offsets the price. So that's kind of cool. You're getting the stock for even cheaper. So what you could do is good implied volatility 60. The delta's pretty high. This isn't still a terrible trade because SoFi's doing good. But if you had 10K or 5K or whatever, you could buy 3 contracts. That's just under four. That's $93 for the week. I know that doesn't sound like much, but it's still passive income. That's still a pretty nice return week over week. You know what I mean? So if you did $100 a week, that's $400 a month. If you got assigned, you would just sell a what's called a covered call because you have the shares. So now you would go, I would say at least above what you bought it for. And then you do the same thing. You sell covered calls. You either get assigned, the stock goes over that price, then you sell all your shares, and then you start selling puts again, or it expires worthless, as in it expires under $13.50. And then you get to keep all your shares and then do the same thing again next week. So it's pretty simple in that aspect of what you would do. So that's pretty much it. Like it's super simple right now. I have a guide that's about to come out, but I'm also accepting like a little coaching program that's 8 weeks for people that know virtually nothing about options or they do know a little bit. And in 8 weeks, I pretty much, you teach a man to fish, he'll eat for a lifetime. That's what I do. I teach you how to do options, but you'll also be able to bounce ideas off of me to make sure you understand fully what you're doing. That way, it's guided in. It's relatively cheap. Uh, I don't need the money. I have enough to just sell options and make these videos just to help people. That's ultimately that's my ultimate purpose. Like I just want to help people build generational wealth because nobody helped me do it. So I'm taking a few clients in that. If you just want to do like a one-on-one thing, it's only $200 for an hour. I can kind of go through your entire portfolio, kind of teach you what I would do, and a little bit more in depth than just a video, right? Pretty much it. Like, comment, subscribe. I'm going to start doing a couple videos a week. And yeah, that's it. Thanks.